Welcome to Finscale, a podcast created by Solen Niederkorn, shedding light on innovation in finance, banking, and insurance.
Unlocking the future of private equity.
The market is so enormous and the opportunity is so enormous that many of those companies will have a living. The important thing is that they all help the industry, help us to educate the private and the individual world. Yeah? And all these companies have their contribution there.
I have been contemplating this discussion for 4 years already. I do not regret waiting. I'm absolutely delighted to have had a chat with Steffen, who provides us with a wealth of insights into the democratization of private equity. What is pleasing about his entrepreneur is his profoundly deep knowledge of the industry and his vision. He explains how he executed his plan with his teams from the very first investment of 10 million euro in an EQT fund to the platform we now know with its myriad of strategy, secondary market, as well as the white label offerings aimed at institutions that want to diversify their private equity offerings for their private clients. It is quite an extraordinary achievement that I'm excited to share with you today. Don't miss a beat and enjoy the show. Hello, everyone. Hi, Steffen.
Hello. Very delighted to be here, Solen.
Yes, thank you so much for your time. It's been a while that I wanted to invite you on my podcast, and for many different reasons, it's been postponed, but I'm really, really glad that you're here today with us. And then you shed light on Moonfare and this great adventure. So many people talk about what you built, and it's really impressive. So thank you so much. Can I please ask you to quickly introduce yourself to the audience, to the listeners?
Yeah, with pleasure. Yeah, look, my name is Steffen Pauls. I'm the founder and CEO of Moonfare. I have a long-standing career before I founded the company in private equity. I've been with KKR in London for over a decade. And most recently, when I was with them, I have been responsible for their German activities. Before that, I founded my first company in the early 2000s. You would call it today also a fintech company. And I started my career back in the 90s in consulting with the Boston Consulting Group.
I thought Moonfare was your first fintech.
Oh, no, it's actually my fourth company in total that I founded.
Okay, perfect. So I really like the way you told me about the story, about how you decided to launch Moonfare. And I already invited people willing to give access to more retail investors, which I find really super because it's private assets. It's a really closed market. So could you go back to the beginning of your story and the beginning of the launch of Moonfare and how, while you were maybe at KKR, everything started?
Yeah, look, with pleasure. And actually, Solen, you're right. It started when I was at KKR, actually at my last day, exactly. What happened? At KKR, as background information, you have, I call it the privilege and the expectation that you put your money alongside the investors in KKR. That means you have to put your own private money as a senior executive into the KKR funds. Mm-hmm. And I did so when I started right in 2004 until 2015 when I left. Over all these years, basically, you get a bonus and the bonus is taken away because you have to invest it into the KKR products. And when I was leaving KKR in 2015, I was basically drawing a balance and wanted to know what my return was. And I was surprised. Despite, financial crisis and 9/11 and other events that happened, I had realized over the decade or a little bit more than the decade, 23% net. So what happened is I went back to my friend and partner, Johannes Huth, who was running Europe at that point in time, and was asking him when I was leaving, can I put another 100K or so into the next KKR Europe fund? And what he said to me was very simple and direct. He said, look, we like you, Steffen, but the minimum is 10 million. Yeah. So then first I thought he is kidding with me. I said, look, Johannes, this is not my pocket size. This 10 million. 100K, but he said, look, we don't have a friends and family program. Mm-hmm. We don't run these. You have to meet the same minimums as every other institutional investor. And that's what was really the beginning of the story behind Moonfare, because I realized that the asset class private equity is really not accessible to private individuals.
Can you explain to us the reason why it's never been accessible? So I know this because I've been working for a while, I told you, at UBS and Lombard-Odier, and I know that at that time we acted as nominee when we were investing for our clients. So how can you explain this? There are many different possibilities to do it, and there were already at that time. So why did it never happen?
Yeah, look, what I did when, I got the no from Johannes, I basically, checked the offerings that were out there from private banks and other players. And I realized, a couple of, call it entry barriers or things that I disliked, actually. First of all, many banks still offer it for relatively high minimums. So you have to be really an ultra high net worth individual, very wealthy individual to get access. The second thing that I realized is that there was a need for an independent curator, someone who would really, in the best interest of the private investor, would screen the 4,000 private equity funds, which this number is, by the way, growing, which are out there globally, and would really select the top 20 or so and bring them to the platform.
Mm-hmm.
The other thing I realized is, and this is by definition, private equity is an illiquid asset class. And I thought for many individuals like myself, you might face an illness, you might lose your job, there might be a divorce, that a path to liquidity at least is an absolute must. And then, last but not least, Solène, you have been in banking, you know this, the process offline process, I call it, to invest into private equity is extremely cumbersome.
Mm-hmm.
It takes hours and hours, left, right, center, KYC, passport here, sign there, then there's a cool down period, and so on and so off. And really, many people told me, look, I'm not doing it because I hate the process.
Mm-hmm.
And this is what I realized, and this is how I came up. There must be another solution, and this solution has to play in the 21st century, and the 21st century plays digital, and this is why I designed and came up with a digital solution.
What was the solution? How did it look like? I guess KKR was the first fund that you convinced. Maybe I'm wrong, but I believe that it is the case. And how did you package this into a more retail offering? While it remains an offering for high net worth, it's not accessible to any retail investor.
Yeah, look, a couple of answers. First of all, and that's the philosophy behind Moonfare. When I left KKR and when I wanted to play private equity, I realized something which was very, very important, which stands now behind everything what we do. I realized that the individual alone, or me alone, is just not strong enough to play private equity. So I came up with the idea, if you can't do it on your own with your 100K, because the minimum entry level is 10 million. If you can't do it, there's another reason why it's difficult to play private equity as a private individual. I said it, there is no ETF out there. Yeah, you cannot buy an index in private equity. If you play private equity, you have to make sure that you invest with what the industry calls the top quartile funds, so the best 25% of all funds. If you just play an index across all these funds, you will not see the outperformance that private equity stands for. So two things I needed. I needed more money or firepower. And the other thing is I needed someone who would, in my best interest, really do the job to select all these funds. And this is, why first and foremost, Moonfare became, as we call it, a community of like-minded individuals that bundle, so to say, their volumes, that bundle their forces, and that get leverage from an outsourced investment office, digital investment office, which is Moonfare. So Moonfare basically, is now and became a fully digitalized platform. The process when you sign up and until you invest takes only 15 minutes, 15. You can go to the platform. The team is looking at 400-500 funds in a given year, and then selects really the best 20 funds that are out there. And actually, the first fund, Solène, was not KKR. It was not a KKR fund.
Okay.
It was Equity Asia, and there's also a story behind it.
Tell me about this story.
Look, what I didn't realize is that you have a classical chicken egg problem. When I started Moonfare. because I went out there, to friends in the industry. I know, of course, from my KKR time, many people in private equity. And I was knocking on the door of a close friend of mine. His name is Markus Brennecke, and he is co-heading private equity for equity. And I said to him, hey, Markus, we know each other for years. I'm doing this Moonfare thing. Please give me 10 million in your next Equity Asia fund. And he said to me, yeah, but Steffen, where's the money? And I said, hey, Markus, I need the offering, and then I can go out and raise the money. And he said, not sure. What happens if you don't raise it? And then, we are both from Hamburg, northern region of Germany. And in Hamburg, the handshake counts a lot. And I said to him, okay, Markus, if I don't raise it with others, you get the money from me. And so then guess what? Of course, I didn't have the 10 million. But luckily, we organized them together, the first 50 or 100 investors, and met the 10 million hurdle. And that was the first investment.
I love that. So you convinced all your former colleagues from KKR.
I did, but the start was everything but easy, I can tell you. And there were, by the way, not many funds that were willing to go on a digital platform in these days, back in 2018 when we launched.
And were you already in contact with a lot of family offices, etc.? Or did you, for the first investor, did you do it by yourself?
Yeah. No, look, the original idea was really from the very beginning to go also through family offices. And another friend of mine, he runs a family office, a multifamily office in Munich. And, typical KKR education, you do your due diligence before you start a company. So I did a dry test, so to say, a survey with his clients and asked them, would you be willing and interested to invest into private equity over a digital platform starting at 100,000 euros? And so then guess what the answer was? Not a single client had any interest. So what happened when I was sitting on these 10 million to organize for Markus Brennecke's EQT fund, I was basically calling everybody I knew in the industry, former KKR colleagues, former people from Goldman Sachs I've met. I called everybody back from my BCG days. I was screening LinkedIn left, right, center. I spent 3 months literally on the phone, and I did over 1,000 phone calls to get the first 10 million together.
Wow, I love that. You have sweat a lot for this.
Okay. That was a tough start.
So that was the beginning. And then was the idea already at that time to cover the entire private asset area or to focus on very specific PE funds? How did you envisage this and how did it really happen?
Yeah, so then that is a story that I, by the way, I have not and never told my team, and I will do so now. We have our summer party in 2 weeks' time. I will share with them the very, very first business plan for Moonfare, which I found in my files the other day, which is dating back to 2016. And I looked at it and wanted to read what my thinking was in these days. And it is really a blueprint for what we have been doing, starting with private equity buyout, then adding other asset classes such as US tech, infrastructure, credit, secondaries, then direct deals. So the entire roadmap, how we developed, was already in this document. And it even included, might be a point we talk later about it, the idea to create a secondary market, a digital secondary market, which would allow for a path to liquidity. And it also contained, our various go-to-market or sales channels, direct to consumer, then B2B, which are family offices predominantly, but also B2B2C, which is going through the banks and enable them to offer private equity to their clients. Everything is written down there. I will send it over after our talk.
Wow, impressive. Do you think that the knowledge of the industry and the knowledge of the clients was poor at that time in terms of asset class? That's my perception, because when I was in banking already 20 years ago, I had a very poor knowledge of private equity. I discovered private equity when we launched an offering in 2007. So it was just the beginning in my mind. Do you think that in 10 years it really evolved exponentially? And would you say that it's coming rather from the clients themselves than from the industry and the bankers and the asset managers, the wealth managers in general?
Yeah, look, this phenomenon, what the industry calls private equity goes retail or democratization of private equity, is really, really in their very, very early days. Yeah, we are, and my comparison is always going back to the last century, what happens in the stock market, we are at the beginning of the last century when stocks were really the privilege of some very wealthy individuals because stock prices were so high. And we all know the evolution on the public side with ETFs and the Revoluts of this world, and everybody can now trade in, trade out. Compared to where we are in private equity and this democratization phenomenon, we are at the beginning of what the industry calls a mega trend, which will probably last 15 to 20 years. Having said that, if you compare it 5 years or 10 years ago, where the time has been and where how well educated people were, in the meantime, when I started at KKR back in 2004, we were globally, I believe, 26 professional executives. In the meantime, KKR has some 2,000 people. So the entire industry went mainstream. Today, the industry buys names that are familiar to people. Think about here in Germany, ProSiebenSat.1 is the second largest broadcasting company. Think about names like Siemens. EQT bought a business from Nestle. People are aware of. KKR bought something from Linde. So names that people are familiar with. Then private equity is in the press more or less every day. The industry stands in these days for 25% of the global M&A volume. Mm-hmm. So it became really a massive economic force. So people read about it. More, call it people with some affinity to private equity, lawyers that work there, people that are in banking like yourself, iBank people, etc., consultants, of course. But it still, became very popular and familiar in this group of people. But there is still an enormous amount of education that has to be done. And why am I so confident that this democratization theme will really penetrate broadly private wealth and private investors? The reason is that the entire ecosystem, and when I talk about the ecosystem, it's the private equity manager. Then we have the asset managers. Think about the BlackRocks, the Fidelities, the Vanguards, so those large asset managers. Then we have the banks, and then we have the private individuals. All of these people need private equity, push for it, and collectively they will educate the market.
Mm-hmm. And do you think that the fact that we have more evergreen funds, or they have the LTIF has been recently reviewed, do you think that it will also provide more liquidity to the market and make it more accessible? Because there is also an issue not only in terms of knowledge, and you need to adapt because it's not at all the same thing as listed markets, but also in terms of liquidity and the subscription process, which is different, the redemption process, the fact that the J-curve, even the J-curve, I think, unknown from many people. So do you think that also the evolution of AIFM with AIFM2 will also enable and facilitate the market?
Look, absolutely. What the industry does is they are working on two ends of the equation. One is, broadening the distribution, so giving access through banks, through digital platforms like us, and the industry supports this. But the other thing is exactly what you say, is also working on the product side. You have the closed-end funds, which is, the main product the private equity has been distributing in the past. But the industry in the meantime, and so did Moonfare, by the way, have developed products that are more suited to a certain group of private investors. You were talking about the evergreen, or what the industry calls semi-liquid funds, which have been a huge success in the US. Blackstone started this. They were raising in certain weeks $1 billion per week for their B-REIT and B-Credit product. And this is now coming over to Europe. Every large private equity manager is launching, as we speak, a semi-liquid fund, which provides a certain level of liquidity. I will come back to this in a second. And then, of course, there's the famous LTIF regime. There's now a new regulation out there. The regulators plus the politicians have understood that it is absolutely unfair and not sustainable to leave a large proportion of the investor community, investor population out of private equity and give them no access. So they're changing this. LTIF now allows eligible people, and we have our own LTIF, which is, in my view, an incredible product, which we launched 4 weeks ago or so, allows now people to invest into best of private equity starting at 10,000 euros. That is a significant reduction of the minimums, and there are more products to come. But there's one point, Solen, that I want to make, and I believe this is really a responsibility of the entire industry. These products, all of them are not liquid. Yeah, they are semi-liquid, and semi means that there is a certain redemption window where you can ask to get some cash back, and hopefully can sell back, so to say, your LP stakes, your investor stake. The issue is, typically investors, they are behaving in herds. Yeah, if one wants to sell their stake, all others also want to do the same. And that happened to Blackstone, and that was in the press all over the place. In the US, Steven Schwartzman himself was on TV every day to explain that these products have a semi-liquid component, and the risk is that the typical or normal investor reads liquid, and these products are not liquid. So if you play private equity, your attitude or your assumption must be that you put them and can put the money for 10 years away, and then you will generate very nice returns. That is really the promise. We have added, a functionality which is unique globally. We have, as I mentioned earlier, our digital secondary market. So there is really a much more healthy path to liquidity. But again, also we cannot guarantee that the market is functioning. We have Lexington Partners, one of the largest secondary players, as a professional backstop behind this market, but even they have no obligation to buy. So there might be also a situation where offering, supply and demand find no match.
It's right to mention it's important. You're right, and this is where knowledge and increased knowledge, even of professional, is so important, in my opinion. Regarding the evolution of the revenues of Moonfare, can you give us a bit of flavor in terms of clients going directly through the platform, the intermediates such as the family offices, and banks using the institutional product that you launched recently, I guess, if I'm not mistaken?
Yeah, look, we started deliberately back in 2018 the platform as a direct-to-consumer platform. Yeah, so you or other people who understand private equity can go directly on Moonfare. They register, they see the pre-selected, curated selection of our funds, and then they can digitally invest. Why did we do so? So then we did so because we wanted to deeply understand how these private investors are thinking, what kind of information they want to have, what kind of education they need, what are their likes and dislikes, where do they want to invest, and to make this process really as smooth as possible. So that was the starting point. Soon then we realized that banks, which are great partners of ours, and multifamily offices also have a need to provide access to private equity to their client base. So we added as a next customer group banks and intermediaries. We have in the meantime 100 family offices, multifamily offices and banks. Berenberg is an example. Quintet, a large private bank across Europe, is another example that are using our platform, typically in a white label form, and they get access to our own funds, or they add funds that they like. We do both and can then distribute super efficiently to their customers. And then the third group you rightly mentioned, which became an incredible strong group in our customer segmentation, are family offices, single family offices. And what they do is an interesting thing. I didn't believe in the beginning that they would use the Moonfare platform, but think about it. We have in the meantime 15 people that do nothing but really screening the entire market globally. We have 8 offices. We are in the US, we are in Asia, we are in Australia, we are across Europe, and we look for and watch out for the best funds which are out there. And these 15 people that are all, by the way, people from the industry, former Apex, KKR people, etc., they do nothing but fund selection and investment selection and have been doing this their entire life. Now, if you talk, even to the largest family offices in the world, they have 3-4 people in private markets, alternatives, and not 15. So what they say to us is, look, a KKR and the Carlyle, I probably have access, I have a relationship, but when it comes really to alpha generating strategies, for instance, that is a mandate we got from the industry, from family offices, I want to play AI. What is the best AI fund? Another family office told us they want to get more exposure to India. They have no clue where to invest. So we became a complementary outsourced digital investment office for the family office space. And that was something that I didn't foresee in the beginning.
So it means that family offices having specific requests from their clients to invest in AI, they go to you and they get some specific analysis or something like that?
They get analysis, they get white papers, they get education material, and then we go out and find the best AI fund globally.
Okay, interesting.
We screen hundreds and hundreds of funds, and we have the bandwidth and capacity to do so. And it's not only multi-family offices, it's also large single-family offices, billionaires that use our platform and our capabilities to complement their internal teams with A, know-how, and B, access, and then capacity to screen and run the due diligence on all these funds.
And in terms of impact, because impact is a very, very specific, knowledge that you need to build in your team. I know that because I'm sitting at the board of Kimpa, which is a family office that is very specifically specializing on impact. So I know that they have teams of analysts working all day on analyzing deals and funds. Did you develop your own, do you have your own resources when it comes to impact, or do you outsource to specific teams outside of Moonfare?
No, we do this internally. And I tell you why. So Len, this is really, I have 4 children. And one thing in my late days, and they keep me young, which I really learned is that, and I'm convinced about what I'm saying, this impact theme is not going away. In the contrary, it's probably one of the most, if not the most important theme of an entire generation. It's sustainability, it's ESG, etc. It's diversity, it's equity, and all these aspects that come with it. And this is why we have built the competence internally. So the fund team, the fund selection team is running a rigorous due diligence on ESG. They have developed their own playbook, best of standards in the industry, and they are going rigorously about it. And we would not invest in a fund that doesn't meet our ESG criteria. That's on the fund selection side. And then, impact became an asset class on our platform. It's not only buyout, what we do mid-cap, we do small cap, we do venture, we do growth, we do best of US tech. We do co-investments in the meantime, we do secondaries, and you name it. But also we did impact, and we had, for instance, Al Gore's impact fund on the platform.
Yes, because there are some competitors of you specifically focusing on one vertical. I received Jacqueline van den Ende, that you might know, who has launched Carbon Equity. What do you think of the evolution of the market?
First of all, we at Moonfare, and I'm very, very glad that we have so many people out there that are doing what we are doing. When I started the company, Solen, we were the first globally, first mover, really spearheading this. I said that people told me this is not going to work. The start was super difficult. In the meantime, guess what? How many copycats we have globally? It's over 150.
Wow.
150 companies like mushrooms in the garden. Yeah, they started doing what we are doing. Partially, they even copied our webpage, including spelling mistakes. Yeah, pretty funny. Huh? But I'm glad for that there are so many people out there. Why? The market is so enormous and the opportunity is so enormous that many of those companies will have a living. The important thing is that they all help the industry, help us to educate the private individual world. Yeah, and all these companies have their contribution there. To your specific question, do I think it is smart and will there be specialized platforms, one for impact, one for buyout, one for tech investments? I don't think so. Because the way I start, thinking about this is always, our thinking starts with the end client, with our customer. And if you are a customer, you really want to get out of one hand private markets. You want to get a solution, you want to get diversification, you want to play different asset classes, you want to get one consolidated portfolio reporting, you want to have all your documents starting from the fund subscription documents down to text documents in one place. And this is why many platforms that are smaller than we are losing, of course, because of our scale. People really tend one-stop shopping to do their business all at once with us and not use one platform for this and another platform for that. That doesn't make sense. And our scale in the meantime, look, we are the largest digital direct-to-consumer platform in the world. We just crossed last week the 3 billion in assets under management. We have over 70,000 people across the globe that have signed up on Moonfare. And this scale gives us an enormous advantage. It brings the costs down, and this is why we are so competitive when it comes to fees. But the other reason is, even more importantly, I would say, we became a really relevant player for the industry. If you want to go to KKR and you bring them 5 million, they might talk to you, they might not talk to you. We would do with KKR in a fund from them 80, 100, 150 million in one go. And this gives you, of course, better access to the best managers and their best products.
But there is, if we're talking about democratization of private equity, you still have the problem of access to the top quartile. So will we, in 20 years, when everyone has access to private equity, how the performance will look like?
Yeah, look, the industry inherently is growing 8% a year. Institutional markets, in particular in the US and Europe, Asia is slightly different, are saturated. Yeah, it's not growing that much anymore. In particular, by the way, in the US. The market size, Solène, just talking numbers, meaning if private individuals would allocate same way professionals do so, 25% of their assets into private equity. The market size for Europe alone is $1,500 billion US dollar. So it's huge, and that will flow into the market. To your specific question, what will it do for returns? Look, two things to mention here, and again, two numbers. And I was surprised to hear it. The opportunity set in private equity, meaning, how many private companies, these are now US data, are out there with 100 million in revenue or more. The opportunity set is 10 times more than public markets. There are 10 times more private companies in the US with such a turnover than listed companies. Mm-hmm. And another stat that I like is, and it's also was a surprise when I heard it, at least, the number of IPOs. If you take the data back from 2000 to today, goes down.
Yes.
Yeah? Mm. And the third thing that is very interesting in the market, which again speaks for private equity, no one can avoid private equity. It doesn't make any sense when they are building their wealth. The third thing is the holding period. Of companies, so companies stay private for much longer. If you think back, Google was founded in 1998. It went public in 2004, 6 years after its inception. People who have invested in these days made 2,000% return on Google. Apple, similar. Think about Meta, Facebook. So in the past, people were, really had access to companies pretty early because they floated, they became public so early, and they could invest. The industry has understood that they left a lot of value creation on the table because they brought these companies to public hands too early, and they have learned, they are smart. And this is why there are so huge pools of capital that really can support a company from inception until they become billion plus companies. And we are seeing this. Think about the Ubers, think about what's happening in the AI space with ChatGPT. The last valuation was already 86 billion. This company is not even public yet. Mm-hmm. It's still in private hands. So the companies stay private, which also is undermining this trend that the number of IPOs goes down, or when they go public much later at a much higher valuation in their lifetime. And this is exactly why private markets, private equity is so compelling.
Very interesting. So you answered my last question, but I have a last question I didn't tell you about. I raised this question to Bill Kelly. You know Bill Kelly. So I invited him like 2 years ago on my podcast, and we also discussed tokenization. KKR is the first fund who announced publicly that they would tokenize their fund. Do you believe in tokenization, and what are the pros and cons of it?
Yeah, look, I'm totally convinced that tokenization and the blockchain will change our industry. Unfortunately, due to the scandal we had with the FTX company, the industry since then has shied away from blockchain and from pushing tokenization. It will come because it is, from a technology standpoint, an incredible powerful solution, and also for the end customer benefits. But today, Solène, and we looked into this, we have our own blockchain group. We can switch, by the way, to blockchain technology-wise, so to say, overnight. We looked really into the space. As of today, blockchain doesn't, or tokenization doesn't help at all in private equity. Why? A couple of reasons. The most important one is it doesn't change the regulation.
Yes.
Yeah, you still have to be an accredited investor. So you have a token. Otherwise, you have a piece of paper. And the other reason is that no one has solved technology-wise the issue with capital calls. Yeah, if you tokenize, you have to buy the token. So you have to pay upfront all the capital that you want to invest. And as you know, in private equity, if you commit whatever 100K to a certain private equity fund, it's been called over 4 years. So in simple words, 25K, 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 25K. If you buy a token, you would have to transfer 100K at once. So those two issues are really in the way of tokenization. We are looking into the space more or less on a daily basis. I'm sure a regulation will follow. Regulation is not, the fastest one to embrace new technology and innovation, but there will be regulatory changes which will allow tokenization really to gain ground. And then think about the world. So then it's not only private equity. Yeah, my dream is, I love art, but I don't have the financial means to buy a great piece of art. I would love to buy a Banksy or something. I can't. But what tokenization will do, it will basically create a divergence between people who own actually the art and people who can exhibit and show the art. So tokenization will allow for people to buy with 1,000, 2,000, 5,000 euros a piece of art and become a co-owner in this art, and then they might have a digital copy or something else on their iPhone. Mm-hmm. Masterworks in the US is doing this as we speak. This will happen with all private assets. Wine has been a terrific asset class in the past, but not many people can afford a wine cellar, a proper wine cellar with Bordeaux and Burgundy and whatever is in there. So that will be tokenized, and that will offer an incredible democratization, not only for private equity, but for all kinds of assets. Mm-hmm. And this is fair and great because it creates more prosperity for more people.
Thank you. Very inspiring, this discussion. Okay, so the last word is recommendation from you to the listeners, to myself. Is there a book or a podcast? Something inspiring?
Yeah, look, I said it earlier, my take when I look back and when I was younger, and I keep on telling this my children is, and Henry Kravis, by the way, said this to us many, many times, make the theme, that the sky is not the limit, really, to your own theme. Yeah. And really think big, dare to take risks, dare to stand up against all odds, even if you are the only one in the room, to state your opinion if you're convinced about it, but really think big. And, you have one life, and there's no reason why you should not become the next Elon Musk or the next Mark Zuckerberg or whatever you want to become. So this is really something that I learned late in my life. I got an education. I spoke about Hamburg, very conservative education of humbleness, which is great. Stay humble, but think big. My father wanted me to become a lawyer. I didn't do so, obviously. So that is really a recommendation for everybody out there. And for me, it was a late learning.
Thank you very much, Steffen. It was really, really inspiring. And see you. Bye.
Bye. Thanks a ton for having me, Solène. It was a pleasure.
Thank you all for listening and sharing this moment with us. Don't hesitate to contact me on Twitter or LinkedIn to share your comments and reactions. You can also rate this episode on your favorite podcast platform. See you soon.